Do you know of anyone? I mean, I think I told you my story with that young man that got $6.6 million. That's only, actually, I know someone else too. But do you know anyone else as a trader that got really, really lucky and made a lot of money?
Not on crypto, no.
No, apart from crypto.
Back, not in modern days, like current days, but back in the tech boom days and whatnot. Yeah. So actually, I'll tell you it's hard to do it today, right? But back then, it's a different form of trading. Have you ever come across arbitrage trading? Yeah. So for those that don't understand what arbitrage trading means in stock market world, is you'll buy a stock. I'm just going to use a name. You couldn't do it with this, but say Telstra. You buy Telstra in the German market
and sell in the Aussie,
and then you sell it on the Aussie market,
because
or vice versa.
Currencies and all that sort of stuff.
And all vice versa. And so some of the biggest killings I saw was in that, going from the firm used to be called BNP Paribas. Then I don't think they're here in Australia anymore. And so I used to see these guys doing and I piggybacked it a little bit, but never the killings they had. But they were dealing in the tens of millions of dollars and just moving it from one to the other. And that was buying and selling things they never owned.
Yes.
Because they never paid for it. Because it was almost within 12 hours the position was closed. And so our market would close at 4 o'clock. And so in the last half an hour, they would, because they'd see the direction of the market. And in the Dusseldorf, the Frankfurt market and Dusseldorf market, you could buy like little stocks. Like it wasn't just Telstra's of the world, it was the pennies, right? Yeah. So they'd load up on all these, going long on all these little cheapy stocks here in Australia that were listed over there.
Yeah. So what they would do is they would buy 5 to 4 in the Aussie market, 5 minutes before it closed down, knowing very well that Germany was going to open up a couple of hours later.
No, yeah, exactly. Yeah. But it was actually earlier than 5 to 4. So it was about 3:30.
All right.
Because then there was sustained buying from 3:30 to 4 o'clock. And so the momentum took it into Germany.
Right.
And then the German market
took off again
because it was mainly grey market over there.
Yeah.
So you couldn't see market depth and whatever. And so then we used to, as a consortium, we used to incentivise the broker over there to look after it. And so within by about 10, 11 o'clock at night, you're out of your position. If not by the morning when you're asleep, when you woke up, you're out of your position. And overnight, you're making anywhere from 20, 30%. And then you're doing it across a number of stocks, and then you're doing it every day. And so these killings, and then the music stopped because then BNP Paribas shut it down. You couldn't get the credit anymore. So if you wanted to buy, you had to pay for it. And
that's right.
Because they were getting smashed with the paperwork. Because apparently, I wasn't aware of all this. Moving stock from Germany to Australia and back to Germany and Australia is a nightmare.
It's a headache.
Yeah, and so they weren't, for the brokerage that we were getting charged, which was not much, it just wasn't worth the effort. So, but outside of that, not multiple millions of in one single trade. No, I never really came across that.
I remember Jamie Packer, when this is some time ago, I think the Aussie dollar hit 80 or 85
cents. So not Kerry,
Jamie. James Packer. It went 85 cents, and that was high for the Aussie dollar. I can't remember his bet, because effectively he was betting. He was trading, but it's betting. I'll call it gambling. And he takes his massive position, because I read about
to go down.
So he went short based on his advice. And it made sense because I was thinking exactly the same thing. I've gone, geez, the Aussie dollar's gone to 85 cents. I've never seen the Aussie dollar go to 85 cents. It went to $1.10. Yeah, he got wiped out.
Yeah,
that trade got wiped out. We're talking, I think it was like $100-odd million. It got wiped out. So this is
suffice to say he hasn't got that advisor around anymore.
Yeah, but anyway, yeah. So I think there's a bit of luck to it as well when it comes to trading.
You always need a little bit of luck.
I think so too.
Like you got to educate, you got to follow the systems, and you need luck on your side.
And I think also with the stock market, because we've all been accustomed to, ever since the global financial crisis, where it took a big whack, all we've seen in the last 16 or 7 years, only one way, and that's up. And we've been conditioned in our minds that even if it goes down a little bit, 5, 10, 15%, no problem, within a month it's going to go up again. That's my biggest fear of the stock market going forward. Look, it may even go further up. I mean, I think we're at dizzy heights now, especially with all this AI. I mean, AI works, and I think in one of the episodes I said, I don't have a problem with the concept of AI, but the amount of billions, I think the big seven, the mega seven, they're spending like $100 to $200 billion each.
Well, it's an arms race now.
On the AI, and you're thinking, well, where's the return? I mean, it's not going to come tomorrow morning. It's going to take a bit of time.
No, it is. But they've got such a large captive audience, though. So, like, if you're a Google, right?
Huge.
If you translate that spend on a per Gmail participant, per Google visitor, per this, per that, it's actually quite low.
For them, because they've got money in the bank.
But all the Mag 7, right? If you think about how many people...
Mag 8, you forgot about CBA. For me, CBA,
Mag 8. And they're maggots.
Yeah, unbelievable.
But yeah, so when you break it down to a per unit basis, it's not ridiculous. It's a big bet, and they've got to get the returns on it. But it's an interesting space.
So if I asked you over the next 12 months, I mean, you can stack a stab arm on it, where do you think the markets are going to be by Christmas?
This Christmas?
This coming Christmas?
I think it'll be similar to what it is now.
You think it's going to be similar?
There'll be ups and downs through that period, but
you reckon it's going to be
similar to where it is now. What history tells you is when you hit highs, the highs touch a few times.
Yeah.
And so I think between now and Christmas, it'll touch a few times. And then the crux will be, can it smash through those highs to create new highs, or the ceiling's too hard and it's got to fall?
Right.
That's the part I can't answer today, and I haven't really done any work technically to assess that or whatnot. But when I hear new highs, that's actually really bullish. So when you spoke about the 85 cents on the dollar, there's no way I would have gone short, because I don't short new highs. Because everyone thinks it can't go any higher when it's a new high, but it's a fallacy. Because new highs generally mean it's broken through a previous resistance of long term. Because a new high, right, smashed. And the momentum pushes it way beyond. So to break through that ceiling, then momentum takes it further. How much further? Who knows? But to go shorting or to sell your positions at that point is dangerous.
Wow. See, I would be shocked if the markets are not down between 20 and 30% by Christmas. I would be shocked. But we will see. No one knows.
Yeah. I hope you're wrong, because that's not much fun. It's been a grind, especially in the small cap market we've spoken about in the previous podcast. Yeah. It's been a grind for 4 years. So I don't want to see a 20-30% decline again, because that's just another year of crapness. Yeah. So I hope you're wrong.
Yeah, because it does
usually are. So
yeah, but it does affect in the area that you operate in, especially the
It does. It has high impact.
Cap.
Yeah.
So it'd be fair to say also that even if the market craps out, you could be running a profitable company with great margins. People just don't care. They just keep pressing the sell button because it's a sentiment.
Oh, it's fear and greed. Like what makes markets is fear and greed. I'm also a big believer with my butcher and my fruiterer. These people, not that I go so much to these people, don't get me wrong, but when they start giving you stock tips, not so much the crypto stuff, because that's a different beast.
But they're giving you stock tips now. They've been giving you stock tips for the last 12 months.
Stock tips.
Oh, come on.
No, when I get stock tips on pennies, like the small little ones, you got to get this, they've got a new technology. I don't even know what it does, but you got to get into it. When you hear that, then you know the market's time to get out.
Right. That's
not happening at the moment, because that's not moving. That market's not moving. It's dead. It's still dead, right? We're in February now, and I'm still not seeing much movement.
Right.
I think it's coming, but I've not seen it yet to validate it. When that happens, so I think personally, we stay stable till Christmas, and then in the new year you get another wave of growth, and then maybe this time next year maybe there's problems. But for this year, I think the bottom of the market's going to start waving up. The top will stay, so it'll be a bit of a catch up, because there's a massive disconnect on a historical basis between small caps and large caps. So that will start bridging. And that'll give us breathing space and play area in our world. And then next year sometime, maybe there'll be problems.
Do you remember how I spoke to you about Commonwealth Bank?
Yes, your favourite bank, yes.
My favourite bank. I did some research actually yesterday. Bank of America, which is like their CBA, I think it's the second biggest bank in America.
I'm not sure the size.
I think it's JP Morgan is the largest bank, and then the second is Bank of America, third is Citibank.
Yep.
Bank of America, not just Bank of America, all the banks in America, their PE, their multiple is about 13 times. Guess what's Commonwealth Bank?
What was it, about 19, 20 or something?
Try 25. Like it is so...
They're not comparable though.
Why? Actually, I don't want to get into an argument with this, because I'm going to... I'm just going to
Well,
disagree.
we haven't got enough time today, so let's save that one for next week. I'll give you some rationale as to why it's different. And the one clue I will give you is, I know you love these AI platforms, but ask one of the AI platforms, and I'd probably recommend to do it through Gemini.
I've heard about this now.
Yeah,
You're going to feed me now with crap now.
it's not crap.
Yeah, go on.
Ask it, if there's a banking default in the States,
Yeah.
which of the banks in the States are most at risk? And then you read that, and then you come back to me with how. Then you'll know the answer why they're different to Commonwealth Bank here.
Okay, I'll put it to you, and again, I don't want to harp on Commonwealth Bank, but I'll put it this way. Nvidia, which is a growth company, would you agree? Microsoft,
Yeah.
Alphabet,
Yeah.
Google, their P multiples is about 25 times, the exact same multiple as Commonwealth Bank. Really, Mark? CBA's in that league?
That's a different comparison.
But why?
No, but you're comparing the American. So the American multiples are lower because of the risk profile of those banks, right? So that's all I was making the point.
Okay, but the
CBA's risk profile is different
but the Mag
than
7, the Mag 7, they're not banks. I'm not talking about JP Morgan and
No,
Bank of
you
America.
introduced a different analogy now.
Yeah.
Or different. My comment was purely based against the American banks.
Even if you had
you didn't ask me if CBA is cheap at 25 or expensive at 25. You just gave me the analysis on the American banks.
Is CBA expensive on a
Yes,
multiple of 25
absolutely
times?
it is.
For every dollar of earnings, I have to pay 25 times.
Yes.
Okay, so you do accept that?
I agree, it's expensive.
Right, thank you.
But in correlation to the US banks, that there's a reason why there's a difference.
Right.
That's all I was saying.
Okay, maybe sometime in the future, if it works out for me, I'll clobber you one. If it works out for you, you can clobber me. But that's fine. Anything else happening in your world?
Well, we're sort of reaching towards the end of this podcast because we're trying to do it in a tighter time frame than the past. So we no longer want to go an hour plus and whatnot. And so I'm going to introduce a little topic that I want you to go away and have a think about, and then we're going to talk about in the next episode.
Right.
Because we don't have enough time now.
Okay.
So I want you to think about, and I'm going to give you this term, and I don't want you to take this the wrong way because
I probably will.
I know you don't like talking about this topic on podcasts, but I'm going to give you this term called ideas sex.
Idea sex.
No, ideas sex. So there's an S on the end of idea.
Yeah.
Ideas sex.
Right.
And think about that and use in the right manner
Yeah.
successful business models.
Oh. Okay.
Now, we're not going to get into it now because
We'll do it next time.
we're in the next time, but I want you to think about that. And I don't want you to use any AI on this one because
No,
I've
I'm not.
already done that, so you can't
Okay.
use that.
Okay, no, I'm not.
I want you to think about it.
Yeah.
But we're going to talk about how idea sex drives a lot of some of the most successful businesses you've ever come across.
Okay.
And everyone thinks they're fantastic new ideas, and they're actually not.
Interesting.
Now, I'm going to leave it on that note.